Welcome. I'm Rob Booker. It's January 20th, 2010. It's a Wednesday, and this is the resumption of the weekly webinar on FX Street. Welcome to you all. We'll trade some support and resistance, and we'll look at some charts based on the Boscillator, which is a measure of the length of time that a currency pair has been away from the 800 simple moving average. I want to start things off by looking at the Australian dollar, US dollar 4-hour chart. It's in an exceptional circumstance right now. It's been away from the 800 simple moving average for 2,004 bars or candles. That's over 300 days, and that's exceptionally outside the boundaries of what is normal. And I want to tell you a little bit about what I'm looking for and explain a little bit about why I am maybe one of the only bears on the Australian dollar that I know about. The currency pair, statistically speaking, doesn't stay away from the 800 simple moving average for longer than 500 to 1,000 candles. It's now 2 to 4 times longer than that. Statistically speaking, this currency pair is in dire need of a correction. Now, the correction can take a long time. However, the correction does need to happen. It invariably happens. You can go back as far as you want to go for 20, 30, as many years as the current currency regime worldwide has been in effect, and it's the same story over and over again. A currency pair that moves away from the 800 simple moving average eventually does have to return to it. And statistically speaking, going 2,004 bars happens maybe once out of every 100 times that the currency pair leaves the 800 simple moving average. So we're in an exceptional circumstance, and there's a variety of things that we can look for in order to execute a trade or enter a trade or watch the market. And remember that your trading is your own responsibility, and although I'm here to talk about types of trades that I'm going to take, you can't hold FX Street liable for anything that happens. Although most of what happens here is going to work out pretty nicely, actually. The 200 simple moving average is colored blue. The 800 simple moving average is colored as a dashed black line. And the red exponential moving average is a 62 exponential moving average. Jenny asks, can I go over the pivot stack method? And the answer is unfortunately not. I do that method in, it takes about 2 days in a seminar environment for 8 to 10 hours each day. So this isn't the environment where I can go over that method. So I apologize, Jenny, if this isn't what you wanted to learn about today. This is a secondary method that I trade that's more of a day trading method that can be used on any day of the week. If the currency pair, the Australian dollar, US dollar 4-hour chart falls and closes below the 200 simple moving average in blue, that is a possible sell trade for us with a stop loss back above the 200 simple moving average and a profit target of the 800 simple moving average. It's totally possible in situations where the currency pair has been away from the 800 simple moving average for this long to draw a level of support and resistance on the currency pair and trade on a break below that level. It looks right now that the currency pair is headed towards the 200 simple moving average on the break of this trend line that I just drew. And it appears that that if you are already short, which most people are not, you could move your stop to break even at the 200 simple moving average and have pure free profit all the way down to the 800 simple moving average if it gets there. The alternate method of entering this trade, we've already gone over method number 1, which is below the 200 simple moving average, method number 2, which is this trend line. Method number 3 would wait for the currency pair to make a new low somewhere around where it's at right now, bounce back upwards, and create for us an opportunity to draw another trend line, and then use that trend line as an entry on the trade. Well, that is certainly a possibility, but that's going to require a lot more waiting, and it could take a week or more even for that to happen. That's the Australian dollar, US dollar 4-hour chart. Most people that I know are bullish on the Australian dollar, US dollar in the long term, but haven't spent a lot of time thinking about the bearish movement that could happen in the short term. Most people are talking about a worldwide economic recovery and that Australia stands to gain a great deal in that recovery. They've talked about the potential for the Australia Reserve Bank, the Reserve Bank of Australia, the RBA, to continue to raise rates. However, all of that seems like a little bit premature to me, and it seems like the currency markets priced in subsequent rate hikes on this currency pair that really haven't happened yet and might not happen. So that's the Australian dollar, US dollar 4-hour chart. I'm bearish in the short term and possibly bullish in the long term. Here's the British pound Swiss franc. It's another currency pair that has been ridiculously overextended on the 5-minute chart. So this is more of a day trade or something that's likely to close over the course of the day, as opposed to something on the 4-hour chart that may take weeks or even months to occur. The pound Swiss 5-minute chart has been away from the 800 simple moving average for 1,658 bars. So we could, in this instance here, draw a trend line across the currency pair and sell this currency pair below that trend line. That would be entry method number 1. Number 2, we could wait for this currency pair to fall and close below the blue 200 simple moving average. That would be entry method number 2. And alternatively, we could wait for the currency pair to fall so far that the red 62 exponential moving average falls and crosses below the 200 simple moving average. And that would be entry method number 3, and that would be a moving average crossover. In any instance, and in any case, this currency pair is preposterously overextended. From every stretch of every way that I analyze a currency pair, this pair has gone outside the boundaries of where it ordinarily does go or where it ordinarily can go. Doesn't mean that we're not in the midst of a savage, renewed, special trend, but it does mean that something exceptional is occurring, and it's definitely due for a correction. When the correction occurs, it's generally due for a correction down to the 800 simple moving average, and that is at 68.27. You could round that up to 68.30, and I think you'd be in good shape. I think you could even round that up to 68.50, and I think that would be a profit target that would be completely reasonable and absolutely acceptable on this currency pair. Most of you aren't in this trade right now, meaning most of you probably haven't looked at this currency pair for a while, and this has definitely been overextended for quite some time. I'm already in a trade on this, and quite negative already, actually, and looking forward to this currency pair retreating and falling back towards the 800 simple moving average. Chris mentions that the 1-minute Australian dollar, US dollar chart has been overextended, and so we'll go down. We've done a 4-hour chart, and we've done a 5-minute chart, and now we're going to take a look at a 1-minute chart. This 1-minute chart on the Australian dollar, US dollar, has been away from the 800 simple moving average for 803 candles or bars, and that is an exceptional amount of time. If you think about this for a minute, you realize that the 4-hour chart on the Boscillator is pointing to a movement down, whereas the 1-minute chart on the Boscillator is pointing to a movement up. And which one takes precedence? Well, it's completely obvious to me, and probably to most of you, that the 4-hour chart is going to take a lot longer to play out. The 4-hour chart is going to take 2 to 3 weeks to play out all the way, maybe even as much as a month or more before that currency pair usually will hit the 800 simple moving average. Now, it can happen in a matter of days if something extraordinary happens in the currency markets, but typically that's going to be a movement that takes a little bit longer to happen. Remember back when we looked at the 4-hour chart that we discussed the fact that it might bounce back upwards all over again and create a trend line for us. And that bounce back upwards could be comprised of a return to the 800 simple moving average on the 1-minute chart. Right now, what we're looking at on the 1-minute chart is a currency pair that has, for all intents and purposes, gone sideways to downward just slightly. And I wouldn't be interested in opening a trade on this currency pair until we crossed up and closed above the 200 simple moving average on the 1-minute chart. So in the meantime, we could see this currency pair fall a great deal. In fact, we could see it fall all the way down to the 800 simple moving average on the 4-hour chart, which is unlikely but could happen before we see anything happen here. However, if it does cross and close above the 200 simple moving average in blue on this chart, then that's reason enough for a buy trade with a profit target of 10, 15, or 20 pips up to the 800 simple moving average. And that's the 1-minute chart update. 1-minute chart trades on the Boss Leader don't take as long to complete. They're generally much quicker. And I'll spend my mornings typically scanning through 1-minute chart time frames to see if any trades are setting up, because those are more like day trades, and those don't take as long to complete, and they provide for some people who like to day trade something to look at, and they can occur at any time of the day. They don't typically only occur at one set time of the day. This is the Euro-Dollar 1-minute chart, and it's been away from the 800 simple moving average for what seems to be about 839 bars, 13 hours. Typically, a currency pair doesn't stay away from the 800 simple moving average for longer than 500 to 1,000 bars. In this instance, we are above average now, just like we are on the Australian dollar, and this is certainly due for a correction. There were a lot of people yesterday I overheard saying that the Euro-Dollar was unlikely to be able to get below $1.42. Well, it smashed through that level and definitely proved everybody wrong as far as that was concerned. It's now time to start thinking about a buy trade on the Euro-Dollar, simply because the Euro-Dollar is so absolutely overextended on the 1-minute chart. Whereas the 1-minute chart, Boyke, can be noisy, meaning it can bounce around a lot. It certainly takes it will certainly take a journey back to the 800 simple moving average, and it will do its thing. So it's absolutely possible that this currency pair will cross up and close above the 200 simple moving average and start a trade off to the 800 simple moving average. In this instance here, you could execute a trade near 41.50 and have a profit target near 41.80 for about 30 pips. And that's absolutely positively a trade that's possible for you to do. There's no reason why it's so noisy that you can't get that done. Other 1-minute charts that may be overextended and looking for a reversal include the US dollar Swiss franc, which has been away on the 1-minute chart for 1,173 bars and is just now crossing down below the 200 simple moving average. I've made that mistake several times today. The 200 simple moving average. And okay, so maybe we're not going back far enough, and maybe it really hasn't been away from the 800 for that long. Let's double check that. I'm going to load more data on this currency pair. It may go back further and further and further, but it's at least 800 bars back. And the more data I load, it seems the further back we go, and the worse the situation seems to be. So this currency pair is certainly due for some type of a correction back lower. And once again, let me delete this trend line or whatever is in the way here. We've just barely now crossed below the 200 simple moving average. And if we break below, say for instance, this level right here below the 200 simple moving average, below 1.0435, I think we could see the currency pair take a trip down to the 800 simple moving average without much of a problem. I could load even more data on this 1-minute chart, and if I did that, it would appear that the currency pair has been away from the 800 simple moving average for even longer than we at first even thought. So it's probably been away for even longer than 840 candles. And if Chris has 845 bars, so maybe we're really close to exactly the number that we thought we would be at. We've had a request from Ed to look at the Euro-Dollar a little bit more closely, which is fine. Be happy to do that, Ed. Just going to wait for that currency pair to load. We could go through the 5-minute chart that has not been away from the 800 simple moving average for very long, 15-minute and 30-minute, which don't appear to have been away from the 800 simple moving average for an exceptional amount of time. However, the 1-hour chart does appear to have been away from the 800 for a while. Seems to be pretty accurate. 722 bars seems to be where we're at. Boyke said, you said average 500 away from the 800. That's any time frame. Any time frame chart. And any currency pair. On the euro-dollar 1-hour chart, once again, Ed, it looks extraordinarily bearish right now, and there's no reason why that trend cannot continue. So I want to be careful when saying that, the trend is going to end. But if the currency pair crosses up back above this green trend line that I just drew, I would not be surprised to see this currency pair go all the way back up to the 800 simple moving average. That trend line is about the steepest trend line that we could draw right now. We can't get much more steep than that, or else we're looking at, I think, craziness. Like, I wouldn't necessarily draw, well, we could maybe draw a trend line across these tops right here, and we could say that a break above this blue trend line here, which I call an entry line, could take us up to this 1-hour trend line on the longer term time frame. And Ed, that would be another option on a buy trade on the euro-dollar. What about sell trades on the euro-dollar? I mean, is there anything that we could look at on the euro-dollar from a standpoint of selling the currency pair? Well, it's just breaking out lower from a range that we were in for quite some time. It's breaking out lower from below this trend line right here. And this currency pair has a long way that it could possibly go. We could see the euro-dollar easily hit $1.38 or $1.37. There's no reason why this euro-dollar has to pull back and get back to the level that it was at. No reason at all. And so it could go for a long time. We could have an emerging trend on the euro-dollar right now that has just started off. And that could be exceptional. We could go a long, long way. It's just not typical for that to happen. Typically, this is right around the range, Ed, where it would pull back. It's not a surprise to me that we got 700 bars instead of 500 bars. And you want to be careful about buying or selling any currency pair without some type of risk management in place that will get you out of a trade if something goes wrong. So simply put, it doesn't have to get back to anywhere immediately. And Chris McLaughlin mentions the hilarious nature. Ed says, I can hold my position up to $1.37. Does that mean you're short, Ed? That's fantastic. If you're short, that would be absolutely spectacular. If you're long on this currency pair and you're experiencing some type of catastrophic loss, you want to be careful and you want to find a place at which you know you can get out. And at this point, you want to be careful and don't let it margin call your account. Remember, even if you end up with a smaller amount of money than you had before, if you live to fight another day, it's better than letting the whole amount or the entire amount of the account go. I think that, Ed, if the euro-dollar 1-minute chart goes above this trend line right here that we drew, the 200 simple moving average at 41.35, I think you have a very good chance of the currency pair getting back up to 41.80. Now, that's probably not far enough for you to feel like you've gone far enough to make a profit, but it could be a temporary trade that you take in the middle of taking another set of trades that works out and maybe banks some money in the midst of an overall correction. If you're looking for a longer-term profit target, Ed, and you're in this trade, I like this green trend line from the 1-hour chart. I think it's theoretically possible that we'll get back up to 45 even, but that's going to be a stretch. Even if this currency pair corrects back upwards now, the currency pair is not going to reach 45. This 800 simple moving average is going to fall, and as it falls, it's going to fall to meet the currency pair. So the smallest red moving average on the charts is the 62 exponential moving average. Ofri asks, where can we find this indicator for MetaTrader 4? You simply go to robbooker.com and you can click on Boscillator, and it will take you to a page where you can get the Boscillator. Ed would be happy if it pulls back to 43. I think, Ed, you've got a great chance of this eventually pulling back to 43. It's probably not going to happen over the next 24 hours. It could, but it's probably not going to happen over the next 24 hours. It's probably less likely to happen during that time. It might need more time to do that. Yeah, I can write the website, no problem. This is the British pound US dollar 5-minute chart, 1-minute chart, 15-minute chart. Really not much is happening on these charts. You're not seeing an extraordinary amount of movement, or it's not like the euro dollar. This currency pair is in much different shape. There's a real struggle right now with the British pound. The British pound is falling against the dollar, or fell against the dollar. Yet it rose against other currency pairs. For example, this morning, the currency pair, the British pound, rose against the Japanese yen, absolutely, quite substantially, in fact. And we saw a fairly significant amount of movement this morning, and now maybe it might try to correct back downwards. But we've seen a ton of movement this morning, and the currency pair this whole week has been range-bound. It's been quite exceptional. And Boyke, do I consider the long-term trend of a pair? Well, I'm typically a counter-trend trader, so I'm not typically trading with the long-term trend. I'm typically placing short-term counter-trend trades in and riding those short-term counter-trend trades out for an extended period of time. So do I think about the long-term trend of a pair? Yeah, I think about it. But I don't necessarily trade it. Euro pound, absolutely happy to take a look at the euro pound. Might take a moment for my currency pair to load. Looks like the euro pound is just taking its sweet time. And doesn't look like the 800 simple moving average has appeared just quite yet. On the 5-minute chart, it looks like this currency pair has been remarkably overextended. We are going through a period of time here, a once-a-year type trend where a currency pair just seems to go on forever and doesn't seem to be able to hit an 800 simple moving average. And this is one of those instances here. The euro-pound 5-minute chart has been away from the 800 simple moving average for an extraordinarily long period of time. You could draw a steep trend line on the currency pair like that, and we could look for a break and a close above that trend line. And specifically also maybe look for a break and a close above the 200 simple moving average. Those would both be indications that we might be on our way back to the 800 simple moving average way up above. And on all of these charts, we can place a stop loss below the lowest point that the currency pair went before it broke above the trend line or before it broke above the 200 simple moving average. Other comments or thoughts that you have about that, anyone? That one is exceptionally oversold. I mean, this has taken a dramatic, dare I say, once in a lifetime move, stuff that we just rarely see a currency pair take. I mean, we're way lower than we usually get on this currency pair. I like a risk to reward ratio that's about 1-to-1, and if I can get better than that, better profit for the risk, I'd love to have it. Peter asks what's the website he can refer to. robbooker.com. And how about we look at one more currency pair? Well, we look at the US dollar, Canadian dollar. This has been on an absolute tear this morning. Dollar Canadian's been moving upwards and upwards and upwards. What's interesting to me about the dollar Canadian, it's been away from the 800 moving average for a very long time on the 1-minute chart. That sets up an opportunity for us on the 1-minute chart to possibly sell this back down to the 800 simple moving average. Yongbin asks why I don't use an oscillator indicator. No, I don't use an oscillator. I don't ever really use an oscillator at all. The currency pair, the dollar CAD, has been away from the 800 simple moving average for 808 bars, 13 hours. And we are looking like we need to take a trip back to the 800 simple moving average. So a cross of the 62 exponential moving average below the 200 simple moving average could be the beginnings of a move to the 800. We could also trade this currency pair perhaps if it closes below the 200 simple moving average, or we could draw a trend line across the currency pair. And those are three different reasonably safe methods for executing a trade on the Boscillator methodology. All right. That's about all I have for today. I've got another meeting coming up. So we've gone over the euro dollar, the dollar Swiss, the pound dollar just a little bit, the pound Swiss, the dollar Canadian, and got a bunch of trades setting up, and it's certainly a day that's going to be interesting. We've seen just a ton of movement on these currency pairs, and movement that has been atypical. So get ready for a wild ride. We've got Bank of England minutes tomorrow morning, on Thursday morning, coming out, and I would not be surprised to see an extraordinary amount of movement on the British pound for the 24 hours leading into that report and coming into that report. Thanks, everybody, for being here. Look forward to being here next week. If you live in Japan, I will be in Japan over the weekend at the Pan Rolling Expo, and looking forward to seeing you all next week. Bye, Maud. It's good to see you. Adinda, thank you for recording it. Thanks, everybody, for being here. I will totally see you next week. Looking forward to it.